Tilray sinking today after the cannabis company announced its acquisition of HEXO, despite reporting a $1.2 billion loss in the third quarter as it looks to consolidate the Canadian market. Vivien Azer, Cowen Managing Director and Senior Research Analyst, joins us now. Vivien, great to have you here. First, as we're thinking about what took place during the quarter and the prospects going forward from here as Tilray sees it, what really jumps out to you?
Yeah, thank you for having me on. I think the first thing that's most important to clarify is that the $1.2 billion loss is in vast majority a function of a large asset impairment. That's a non-cash charge and is just a function of the fact that valuations were much, much higher when Tilray and Aphria were combined. And so that's really more of an accounting nuance than anything else, and is not necessarily a reflection of the cash generation of the underlying business, where the company did reiterate their target to generate positive free cash flow in fiscal 2023.
I mean, that said, Vivien, the business is not going gangbusters, I think we can say, right? And what we have in this HEXO acquisition, it seems to me, as someone who's not as steeped in this as you, that we see CEO Irwin Simon sort of employing a similar strategy to what he did in the packaged food industry, where he's sort of rolling up a lot of different assets. Is this going to be as successful as it seemed to be when it came to food?
So certainly you're absolutely right, Julie. That consolidation strategy is well evident at Tilray, and it's not unique to the way that Irwin's approaching the cannabis business, because it's the exact same strategy that they're pursuing in beverages. And I think that what they're trying to accomplish here is to create a very durable CPG business. The beverage M&A is much more stable and frankly, much more profitable on an ongoing basis until we get better underlying fundamentals around the cannabis marketplace. So I think they're using consolidated beverage portfolio to help fuel some of that cannabis M&A. Certainly, the jury is out on whether, consolidation ultimately drives better market share and revenue performance. What I will say is unique about this transaction is that while there has been quite a lot of M&A in cannabis, I think you would be hard-pressed to find a transaction where close to half of the value can be made back with cost savings. So specifically, it's a $56 million transaction, and the company is targeting $25 to $30 million in cost savings.
And so what will determine whether or not this acquisition is successful? Because the type of consolidation that we have seen in the space is typically for either taking on more licenses to operate in certain regions or for vertical integration for the cannabis companies that are trying to maintain more of their operational footprint. So what deems this a good or a bad acquisition? And over what period of time would you be watching that?
So I would just remind your audience that these two companies had an ongoing strategic relationship, so they're not starting from square one. For the last 9 months, they've been working together on joint manufacturing, leveraging each other's core competencies, and both companies have been stripping expenses out of the business as a function of that strategic relationship. That certainly gives you more line of sight in terms of the achievability of the targeted cost savings. In terms of the KPIs for success, probably a year or two. They're targeting a close of the transaction in June of 2023. But I think, market share takes time to turn around given the nuances of the Canadian marketplace. But each company does have their clear distinctions in terms of capabilities from a production standpoint.
Vivien, you did decrease your price target as a result of these numbers and the deal to $5. And you talk about the struggling Canadian market, and you're mentioning it here. What needs to change in the industry for things to get better? Or is it just that this is a commodity business and this is kind of what it is?
So, a lot of industry operators have been calling for a consolidation in the market as a necessary mechanism to improve the economic backdrop. Certainly, Tilray's CEO, Irwin Simon, has pointed to very high tax. I don't think they're going to get any tax relief here. So I do think a consolidation could certainly be beneficial. Ultimately, what we're facing is a lot of price deflation in the marketplace. The P&L impact at Tilray specifically of price deflation did abate, thankfully, in fiscal 3Q as a $3 million headwind versus a $12 million headwind in the prior quarter. But price deflation continues to be problematic. I don't think it's because the product is a commodity. Certainly, you could argue that flower is, but there are a lot of other form factors that are value add, which we can certainly see in the United States. Consumers are willing to pay a premium for things like vapes and edibles.
In the absence of significant legislation that was expected, perhaps, during the Biden administration, one of the topics that was discussed even in the campaigning leading up to the 2020 election, if we were to see a more significant shift even in the next general election, how much further out does that push legislation for cannabis, and then even furthermore for the publicly traded entities? What type of period are we talking about that they might need to wade through just for that next major wave of some type of legislation to even be discussed or put to a vote?
Well, I think as it relates to Tilray specifically, that's a ways off. They've been really clear that they wouldn't enter the United States unless there was federal legalization. In partnering with my policy counterparts at Cowen, in particular, Jarrett Seaberg, we're not looking for federal legalization anytime soon. What we had been hoping for in the 117th Congress, when Democrats had control of both the House and the Senate, was safe banking passing, which wouldn't necessarily impact Tilray, but would certainly be a step in the right direction for federal legalization. That did not materialize. We're not looking for anything to happen between now and the 2024 election either. So anything really meaningful in terms of federal change in the United States, we think is a ways off.
Yeah, if the Dems couldn't do it when they had control, not going to do it in divided Congress is for sure. Vivien Azer, thanks so much. Good to catch up with you. Cowen Managing Director and Senior Research Analyst covering cannabis and consumer products.